Very good morning, everybody. Welcome back to your live virtual classes. Okay, we are doing the paper one accounting, and in that, we are in the fag end of the chapter of the particular portions. If you see the paper, chapter number 11. Okay, that's the company accounts. So, if you ask me what is the weightage of this, so minimum you will be getting somewhere around 16 to 20 marks for this particular chapter alone, one of the most important, sometimes even more than that. So minimum also. You will be getting, okay, 20 to 25 marks you can expect from this particular chapter alone. Yes, Akshit. So very important chapter and a very easy chapter as well. So this particular chapter has got 6 units. Okay. There were few units which actually was there in your intermediate, but they just brought it down and combined it everything at your foundation level. And very easy. Okay. So very easy if you ask me. Tanya Sharma, everybody. So it's good to see all of you back after exactly 1 month, I suppose. October 25th, I finished my last class. Yeah. So, yeah. So, coming back. So, how are we going to do this chapter, or what is that we are going to do exactly? Is that we are going to divide it. Okay. So, as there are units, so there are 6 classes to 7 classes for us assigned for just company accounts. We'll be finishing very comfortably, like how I finished all the other 3 chapters. That only this chapter also will be done. Okay. So now we are going to look at your unit number 1, the first one. It's introduction. So when I talk about introduction, so what is that I have to know about this or know from this particular unit is that you can get a 2 mark question from this particular unit. Okay. So it's always important that you people understand what are the basics. Okay. So I can start up a business today. I want all of you to please listen to me. I can start a business today under different forms of organization. So I can be the only owner and very small scale business. I have enough money savings. So I can put my savings and start a business today. So that form of business is called as a sole proprietorship, the single owner concept. No, I have my friends who also have similar ideas. They're also very interested to do the business along with me. They also bring in their capital. Capital means money required for the business. So when 2 or more people gather together and they form an arrangement wherein they carry on the business, any one of them does it or all of them do it together, that we call it as a partnership. And already the partnership is over for you, like they finished. Now, sometimes even in sole proprietorship and partnership, the money or the capital required or the capital obtained can be very less. So you need a higher amount of capital. When you need a higher amount of capital, what is the other form? What is the other option? What is the other choice you have? So there, the company comes into the picture. So what is this company form of organization? It has been derived from a Latin word, 2 words put together, com and panis, to come together and to have bread. What is this, madam? What this company has to do with coming together and having bread? Which means that in the olden days, the business or the scale of the trade was very small, that people used to discuss about the business when they used to eat. So they used to come together, sit around, and when they used to eat, they used to discuss about the business. That's how the word or this particular compan is put together, the Latin word. We started to term company as a single word to show that it is a larger form of a business. And today in our Indian law, a company means a business organization which is incorporated. Incorporated means come into existence or registered itself under the Act, Companies Act 2013. So when I say a business has registered itself under the Companies Act 2013, it means that a company has been legally incorporated, legally law, which is the law Companies Act 2013. So as per the law, if you are creating a particular organization, registering them, and this particular company form is already established, using this company, if you are going to pool in the money and then start doing a business, you call it as company form of a business organization. Till now in accounts, we saw different concepts right from the accounting process wherein you started with journal, doing the ledger, preparing subsidiary books. Main subsidiary book was your cash book. And in doing all of this, you were having certain mistakes. So you did rectification of errors. And then you did my books are there, bank books are there. I need to reconcile both. Okay, after reconciliation, the BRS, then you had inventories which you have in the business. How do we deal with inventories? That was your chapter. And then we had depreciation and amortization, and then we have bills of exchange. That was also a part. Apart from that, we had the final accounts, NPOs, sole proprietorship, that is your incomplete accounts or accounts from incomplete records. You did partnership, and then finally you are into your company's accounts. Different forms of business organization, accounting processes you have learned. So the final step here we are is in a bigger form. So the business organization registered under the Companies Act 2013 is called as a company. What are the accounting processes with regard to the company? So here we will be discussing about the instruments. So a company, why will you choose a company? You have sole proprietorship, you have partnership. But why will you want to go for a company? I want to go for a company because it has few advantages. In those advantages, one of the most important advantages, I can pull in more money. Sole proprietorship means only my money is involved. Partnership means 2 to 3 people's money is involved. But when I want to do it on a very, very large scale, I will go for a company setup. So in the company setup also, technically, I can invite, you'll have different types of companies that we will see now. But technically, wherein you can pool in more money than in partnership or sole proprietorship, you will be going there. Now, the point of discussion is in all the 6 chapters or all the 6 units of this particular last chapters, what are you going to see? We are basically going to talk about shares and debentures. That's all. In shares, you again have 2 types of shares, equity shares and preference shares. Debentures, they are like your debt. So anywhere which you are going to talk about these instruments, basically you should understand that these instruments bring money inside the business. If I'm going to issue equity shares and if the public is going to take up the equity shares, it means that they are giving you money. Okay? They are giving you money. Can I have the tech support to mute and just hide all the videos, please? I don't want any disturbance in between. So coming back to the point, all these instruments, whatever is there, whether you issue equity or you're going to issue the preference shares or you're going to raise money or you're going to give the debentures, in every way which very, very simple and very clear concept is that, yes, very clear concept is that you are going to get money into the business. That's all. So we have 6 different units. Like apart from the unit 1, if you're going to remove, there are 5 units that you have. All the 5 units, they talk about how do you have to do the accounting treatment. When I issue equity shares, what is the accounting treatment? What are the different conditions? For different conditions, how have we got to do the accounting treatment? That is your unit number 2. Unit number 3 talks about issue of the preference shares. How is the issue of, okay, issue of preference shares? We talk about issue of debentures, unit number 3. So in the unit number 3, issue of debentures, how do you issue a debentures? Usme we have different kinds of concepts, 4 to 5 concepts in each of the chapter or unit. You will have 4 to 5 concepts. Is 4 to 5 concepts go if you are getting it thoroughly inside, if you are able to understand the logic, that is how we are going to teach. Understand the basics, you understand, become strong in the foundation, practice more. It will be very easy. So I promise you that we will be doing all the illustrations and if possible the practical questions behind also. If not as an assignment, you can work out the practical questions and see. But illustrations we will be completing maximum possible. Your unit number 4 talks about the bonus and the rights issue, which is again a part of your equity shares issue. And then your chapter number 5 talks about redemption of preference shares. And unit number 6, not chapter, units, sorry. Chapter is 11. Then unit number 5, redemption of preference shares. And then unit number 6 talks about redemption of the debentures. Redemption ka meaning hai, when I issue, I get money. When I have to give back the money, when I have to repay back, that is called as redemption. Repayment is also called as redemption. Clear, everybody? So that is what we are going to see with the next 6 units. Before that, the first thing is how do you define a company? So I have given you Mr. Tulsina, then everybody else, you people have to wait. Just now it is 10 minutes that I started the class, okay? Let me finish a particular tranche of this and then at 12 o'clock I will take your doubts. Anyways, it's going to be a theory. Okay? Today, maximum will be theory, little bit sums will be working out. Please listen concentratedly. The unit number one. So first thing is what or how do you define a company? So company can be defined as an artificial legal entity which is registered under the Companies Act with a common seal and it has got a perpetual existence. Okay, so that is how you have to define, or that is how you define a company. So it is a separate legal entity, or in other words, you have something called as artificial person with a common seal and a perpetual existence. These are all from the definition of how or what a company looks like. These are all the characteristics. When I want to discuss about something, I should always understand what are the main characters, important features of a company. So when I talk about separate legal entity, always the company is different. It is separate from the ownership. It is separate from the shareholders, or it is separate from the promoters. If you have a problem with the company, you can file a case against the company. If you have a problem with the members of the company has got no responsibility here. You can directly file cases on them. Is that clear? So once when a particular organization gets itself registered under the Companies Act, it becomes an incorporated association. Incorporated means getting registered under the Act. Incorporation coming into existence. That's an incorporated entity. And once when you become a company, you get a separate legal identity. You are recognized as a person, but natural person where you can talk, you can breathe, you can walk like all others. No, I will be an artificial person. I am not a citizen. What is this? Not a citizen. I cannot vote in the elections because am I an actual person? No. So I am an artificial person. Okay. I'm not a natural person. I'm also not a citizen. I'm just an artificial person. So, as I get a separate legal status, if anybody has any problem with the company, they can file a case against the company. But, madam, but to file a case against the company should be held liable. The company should be able to enter into contracts. Yes, I am coming into that. The company, once registered under the Companies Act, gets an artificial legal entity status, which means that it can enter into contracts like us, where we put our signature. The signature of the company is nothing but the common seal. You can get a seal done in the name of the company. In whichever papers or whichever documents the seal is printed, the seal is affixed. When you have the seal of the company, it means that the company is legally binding. The decision of the company is legally binding. If tomorrow the company says, no, no, this document, there are conditions, the company did not fulfill, so you can file a case against the company. The main thing is the signature of the company in the form of a common seal is to be there on the papers. Okay. Perpetual existence. The company continues to go on in spite of members being there or not. If members, or there is a very, very, very popular saying, members may come, members may go, but the company continues to exist. So that is why when I told a separate legal entity, it means that when the systems are in place, the company can continue irrespective of whether people are there behind the company or not. Least botheration. Okay. These are the main important features or characteristics of a company. Apart from this, you can have the others also. There is a distinction between management and ownership. So those who manage the company and those who put in their money into the company can be different. Okay. Yes, Shweta, very good. One of the most important point is limited liability. Very, very important. Actually, this should be one of the point here as well. Why is this important? My dear students, please understand. Only in the case of a company, you have a limited liability. Limited means there is a limit to it. If you are a partner or you are a partner under partnership firm, or you are just the sole proprietor, what happens is if the company's debts means loans taken more than the assets, 100 rupees asset value, 200 rupees I have taken loans against them. So even if I sell the assets, I will just get 100 rupees. Will I be able to settle the 200 rupees? No. Still, there will be a shortfall of 100 rupees. If you are a sole proprietor or a partner, your liability will be unlimited. That means after the business assets are taken over, people, whoever the loans, creditors are there, they can come and take your personal assets also. But in the case of a company, your liability, in spite of how much ever let it be outside, your liability will just be limited. Okay. So this limit can be limited by shares, which means that if you are going to get, suppose, let us say, 100 rupees as the share capital, you have subscribed and got 100 rupees, out of which you have already paid 50 rupees when the company has asked. Now the remaining 50 rupees is the only amount that is left by you to be paid. So in the event of the company needing money, your liability will only be to the extent of 50 rupees. That's all, not more than that. After you give your 50 rupees, if the company is not able to pay their debt, that's all. It is not your problem. Limited liability, very, very important. And then you have maintenance of books. So here when I talk about maintenance of books, we need to understand about two particular, yeah, we need to understand about two particular clauses or sections here. The first section is section 128. The second section is section 129. Section 128 talks about maintenance of books. Every company at its registered office. What is registered office? When a company comes into existence, when a company gets itself registered under the Companies Act, okay, it becomes a company. So at the time of that particular registration, you are supposed to give the name, you are supposed to give the address of the office where you are going to have. So the main office will be called as the registered office. So at the registered office, as per section 128 of the Companies Act, every company shall maintain all the books, papers, documents, whatever statements, all of them should be maintained at the registered office, either in a physical format or in electronic mode also. Like you can have all these together put inside a tally, or you can have all these put together inside a manual register. Whatever let be the mode, manual or digital or electronic mode, you are supposed to maintain all the books of accounts. That means whatever transactions are happening in the business, it has to be recorded and it has to be held at a particular place. Which place? Registered office. Every particular books of accounts or anything and everything that shows the accounting transaction should be maintained at the registered office, either in the physical form or in the electronic mode. Very, very important. Okay. What does section 129 say? The 129 section says that it is the responsibility of the management. Okay, management means who? The business or the company, to maintain the books of accounts. Okay, and to provide us with the financial statements, which shall give a true and a fair view. Okay, which shall give a true and a fair view. So, madam, when we talk about section 129, we are talking about something called as the financial statements. So, what do you mean by the financial statements? The first meaning of the financial statement is the balance sheet. which shows the assets and liabilities of the business at a given point in time. Okay, which shows the assets and liabilities of the business at a given point in time. Now, this should be as per Schedule 3. And then we have something called as the profit and loss account. And then we have cash flow statement. And then we have changes in equity statement. And then we have notes to the financial statements. What are notes? What are all of these? All of these put together are called as the financial statements. We just only know about preparing a balance sheet and P&L account. That is what we learned in all our topics till date. Correct? Final accounts, NPO, accounts from incomplete records, or in partnership, we just learned only preparation of these two things till date. But when you come to a company, in addition to the balance sheet and P&L account, you are supposed to prepare a cash flow statement. What is cash flow statement? Cash flow statement means when a company is dealing with shares or debentures or any kind of activity, there will be certain cash that comes inside the business. And there will be certain amount of cash that goes outside the business. This we call it as cash inflow when it comes inside. When it goes outside, we call it as cash outflow. And the statement which records both the inflow of cash and outflow of cash is called as the cash flow statement. So every company has a responsibility as a part of the financial statements. It is not sufficient if you just prepare the balance sheet and the profit and loss account, but you should go a step forward. How much cash is the company having? To ascertain this, you will have to prepare the cash flow statement. Does it stop there? No. Madam, another thing, changes in equity. If during the period there is some changes in equity means the equity shareholding pattern changes. There are few people who are selling the present equity shares. There are other new people who are coming into the business or into the company. In case of such changes, you should always show such changes in the statement. So sometimes it is not required that this statement should be there. It can be a nil statement also. But if there are changes, then such changes in your equity shareholding pattern will come into this statement. And the final one is notes to the financial statements. So whatever amounts or whatever major, the main headings, you're going to put it there and give the total amount, the breakup of it. So the notes are nothing like but like your working notes. When you do a full-fledged question, you have working notes. Yes, Khalid. When you do an accounting problem here, like when you do a final accounts problem or an NP or anything, you will have certain working notes to be done. Correct? So in the case of doing that particular working notes is to explain how a total amount has come. You give the breakup of that particular value. The same way, when a company prepares its financial statements to explain what are the bigger amounts, you give a breakup in the notes. That is the complete schedule or the financial statements. Now, if you ask me, madam, should we read the Schedule 3 financial statements format? You need not do it on purpose. Like you need not memorize everything, not required. Because still now your NPO, sole proprietors, the accounts from incomplete records, partnership, and your final accounts, it is given. Okay. In all these three, normal presentation is okay. When you come to companies accounts, as we start doing the questions, when we start working out or when we do the balance sheet, you can understand the format. That much extract is enough. You need not construct the entire balance sheet as per Schedule 3. That is not the requirement. But when you go to the intermediate level, automatically by practice, you will get that. Okay, now in this particular level, they will just ask you to pass the entries and then do the relevant extract of the balance sheet and not the full balance sheet. Is this clear? So now from which topic to which topic we went, we were talking about the features. So Tulsinath had asked me, Madam, explain what is artificial person. Artificial person means a person who cannot or who does not have life. He cannot eat, breathe, see, talk, feel, touch, anything. But why do we call a company as a person, and that too artificial person? Because in the eyes of law, it has a legal status. But in the eyes of biology or whatever you call it, it's not a natural person. It is just a incorporated legal artificial person. So, like a person, it can enter into contracts. So, the limited activities or the limited scope it has. That is the meaning of an artificial person. So, under the characteristics of a company, it is a separate legal entity, which is very different from that of its owners. And under the law, a company means a separate person, and you can get a legal status for that. So, when you continue to do the operations under this particular concept of a company getting registered, okay, company being registered, that will be called as a separate, ओके दैट इट विल बी कॉल्ड एज ए सेपरेट लीगल एंटिटी. सो जब हम कंपनीज एक्ट में रजिस्टर होते हैं तब कंपनी को एक इंडिविजुअल सेपरेट लीगल एंटिटी का स्टेटस मिल जाता है, विच मीन्स दैट कंपनीज का वो स्टेटस है उसका ओनर से वो बहुत अलग हो सकता है, वो बहुत अलग होता है. और किसी भी प्रॉब्लम में कंपनी के अगेंस्ट और कंपनी के ऊपर ही आप केस को फाइल कर सकते हो. उसके डायरेक्टर्स के बिना यू कैन जस्ट होल्ड द कंपनी लायबल. Okay. Yes. And then common seal. The artificial person, abhi to I have explained, artificial person, it cannot breathe. And legal particular company cannot do all the activities like a normal natural person, but just it can do the activities like entering into contracts, filing cases, all of that is like a person only. But the remaining part, since it is not like a natural person, you call it as an artificial person. एंड द थर्ड थिंग उसका सिग्नेचर, कंपनी का सिग्नेचर को हम कॉमन सील बोलते हैं. एंड इट इज ओनली थ्रू दिस कॉमन seal that the company enters into contracts. This common seal holds the company very, very responsible, and that is how you will be able to hold the company liable. Then perpetual existence. कंपनी के पीछे मेंबर्स है या नहीं है, इसके बिना कंपनी को एक परपेचुअल एग्जिस्टेंस यानी कंपनी कंटिन्यू हो सकता है. सिस्टम सभी प्लेस में होने से कंपनी का एग्जिस्टेंस उसके मेंबर्स के एग्जिस्टेंस से बिना अनअफेक्टेड रहता है. And then you have a distinction. In case of a company, the management and the ownership of a company are different. There are two different parts. Okay. And then you have limited liability. कंपनी का स्पेशल फीचर कैरेक्टरिस्टिक जिसको हम डिस्टिंक्ट कर कहते हैं पार्टनरशिप और सोल प्रोप्राइटरशिप से, ये कैरेक्टर है लिमिटेड लाइबिलिटी. ओनली टू द एक्सटेंट ऑफ जो आपने शेयर्स को सब्सक्राइब किया है उसके ऊपर अनपेड अमाउंट जो होता है उस अनपेड अमाउंट तक ही आपका लाइबिलिटी होता है. इन दिस एग्जाम्पल 100 रुपीज इज द वैल्यू यू हैव सब्सक्राइब्ड, उसमें 50 रुपीज ऑलरेडी यू हैव पेड. वो रिमाइनिंग 50 रुपीज बाकी जो कुछ भी 50 रुपीज अनपेड है, only to that particular extent it will remain, only to that particular extent it is going to remain the liability. उसके ऊपर कुछ भी you cannot get it. Okay. Now coming back, maintenance of books. Every company as per section 128 and section 129, you are supposed to maintain the books of accounts. Books of accounts क्या होता है? Any paper, any document, any statement, any book that records the accounting transition. Okay. Not a citizen. Okay. So coming back, any particular transaction that you are going to maintain should be recorded and it should be preserved at your registered office, either in the physical mode, आप जो कुछ भी manual में entry करते हो उसमें, in that particular mode also you can maintain, but if you have any like tallies or any other SAPs, ERPs being implemented, आप वो इलेक्ट्रॉनिक मोड में भी इस पेपर्स को यानी बुक्स को मेंटेन कर सकते हो. बट वन ऑफ द कैरेक्टरिस्टिक्स और एन एसेंशियल फीचर इज दैट एवरी कंपनी हैज टू मेंटेन बुक्स ऑफ अकाउंट्स. तो बुक्स ऑफ अकाउंट्स यानी फिनेंशियल स्टेटमेंट्स का मतलब क्या है? सेक्शन 129 में दिया गया है कि 5 थिंग्स, ये पांचों आपका फिनेंशियल स्टेटमेंट्स बन जाता है. ये पार्ट्स है बैलेंस शीट, प्रॉफिट एंड लॉस अकाउंट, कैश फ्लो स्टेटमेंट्स, चेंजेस इन इक्विटी and notes to the financial statements. all five put together, you will be calling them, they will become your financial statements. And here, Schedule 3 के हिसाब से आपको बैलेंस शीट एंड प्रॉफिट एंड लॉस को प्रिपेयर करना पड़ेगा। बट अभी फाउंडेशन लेवल में हम जो कुछ भी अगले वाले यूनिट्स में वॉट एवर सम्स वी आर गोइंग टू वर्कआउट, हम जस्ट एक्सट्रैक्ट प्रिपेयर करते हैं। पूरा बैलेंस शीट और पी एंड एल अकाउंट को मेमोराइज करने का नीड नहीं है। सो डोंट गो एंड मेमोराइज एवरीथिंग, only to the extent of what is relevant for the particular lesson or this unit. We will go only till that. Is that okay? So maintenance of books is important. Then access to the books, जो कुछ भी, access to the books is very very important. आप जब कंपनी में रजिस्टर होते हो, when you get registered yourself as a company, you are supposed to, one of the characteristics is that आप जो कुछ भी books of accounts को maintain करते हो, उसका information it should be available to the public to be accessed. Okay, MCA, मिनिस्ट्री ऑफ कॉर्पोरेट अफेयर्स में जब आपका एनुअल रिटर्न अभी आपको अपलोड करते हो, पब्लिक को उस डिटेल्स का दे हैव टू पे सम फीस, बट उस डिटेल्स को वो एक्सेस कर सकते हैं। सो एनी कंपनी एट एनी गिवन पॉइंट इन टाइम, पब्लिक कंपनीज यानी लिस्टेड कंपनीज को दे विल पब्लिश द अकाउंट्स। इफ इट इज अ प्राइवेट लिमिटेड कंपनी, ऑन एमसीए साइट यू आर गोइंग टू अपलोड, एंड फ्रॉम दैट एमसीए साइट आपको वो वाला बैलेंस शीट यानी फाइनेंशियल स्टेटमेंट्स का इंफॉर्मेशन मिलता है। So one of the feature is that you have to keep all the books of accounts in a place where the public can access it. So public लोगों जनों के लिए, if you have to give the information, you should give the information about the financial statements or whatever things that is being done here. Okay, so access मिल सकता है. Okay. So characteristics is different from rights. Characteristics are inherent. Suppose I talk about a person. So उसका characteristics क्या है? वो I can tell वो tall है या short है, वो fat है या thin है, वो चल appearance, and that is how you are going to describe. So जब हम describe करते हैं कंपनी के बारे में, उसको हम characteristics बोलते हैं। But लीगैलिटी पॉइंट से, हम लॉ के हिसाब से जब हम बात करते हैं, इस कंपनी को इतने सारा राइट्स है, वो ये सब कर सकता है, और इसके बिना वी हैव सो मच ऑफ रेस्पॉन्सिबिलिटीज, ये सब सारे का सारे रेस्पॉन्सिबिलिटीज यानी ड्यूटीज होता है। ये वाला हम लीगैलिटी पॉइंट से हम जब इंट्रोड्यूस करते हैं, उसको हम बोलते हैं राइट्स। कैरेक्टरिस्टिक्स आर डिफरेंट फ्रॉम राइट्स। सो एक्सेस टू बुक्स इज अ राइट गिवन टू द पब्लिक. So public can always have access to the books of accounts of the company. Is that clear? And then you need to do the auditing of the books. Every year at the closure, when your company qualifies or meets few conditions, you are supposed to engage an external auditor to give the shareholders an assurance. शेयर होल्डर्स का पैसा कंपनी में है, तो सारे के सारे ट्रांजैक्शंस यानी सारे के सारे द कंपनीज थिंग्स आर गोइंग इन अ प्रॉपर वे और नॉट, सो इसका अश्योरेंस तो ऑडिटर्स ही दे सकते हैं। तो एवरी कंपनी हैज टू गेट इट्स बुक्स ऑडिटेड, वेरी वेरी इंपॉर्टेंट। क्लियर? सो दीज आर द मेजर कैरेक्टरिस्टिक्स। इसके बिना आपके टेक्स्ट बुक में you can have the other characteristics also, which you can just give a reading. Is this clear? So with this we come to an end of this particular unit, but before that we have different types of companies. Okay, so we have different types of companies. The types of companies, based on the names or based on few conditions, you can have different types. So first thing is, the simple understanding everybody knows is that we know what is a private company and a public company, correct? So private company is a company which is just formed with a closed group of people. Okay, a private company is a company that is formed just with a closed group of people. So when I talk about types of companies, it is formed with a closed group of people is a private company. Closed group of people where you don't have the right, or it restricts your right to transfer the shares. which means that amongst the closed group you can transfer, but you cannot go and give it to somebody who is unknown. That is not possible. Okay? Restricts the right to transfer the shares. And then minimum paid up capital or the minimum capital can be 1 lakh rupees, and the number of members, maximum number of members will be 200. So all of these are restriction clauses. This is a private company. Opposite of a private company is a public company. Public company is one which invites the public to subscribe to what? To the shares of the company. It says all the public can give me money. I will take it. There is no restriction to transfer the shares. Today I don't want the shares. I can transfer it because it's a public company. So I can put it across. So public can easily trade. Okay. That is this. Now, minimum paid up capital, like here it was 1 lakh. Minimum paid up capital is 5 lakh rupees for a public company. And number of members should be minimum clause. Generally, the number will not actually apply here. Okay. The minimum will not apply here. The maximum also will not apply here. You can have, let us say, minimum two, and then there is no restriction. You can have any number of members. And then we have a listed company, a company that gets itself listed on the stock exchange is called as a listed company. Unlisted company, it is not yet listed on the stock exchange. Like you cannot trade in this particular company shares. It is not listed on the stock exchange. Okay. What is the next type of company? One is a government company wherein the government, which government? It can be central or you can have state or both together, combination of both the governments put together. If they hold 51% of the ownership or the capital, then that company becomes a government company. Clear? Next we have, yeah, next we have a foreign company. What is foreign company? A company who has the registered office outside India, but there is a place of business in India. It has a branch in India. It does business in India. So that is why even if the majority or the head office is outside India also, this company comes under the Companies Act purview. Okay. Head office outside India, but place of business in India. Place of business in India. So, like Shweta was telling, OPC, one person company. One person is the member. He is also the director. He handles the company like a sole proprietor, but under the company's format. Okay. Then we have the holding company and subsidiary company. What is holding? Very simple. When one company exercises control over the other company, the company which is exercising the control is called as the holding company, and the other company which is getting controlled is called as the subsidiary company. So how can the control be there, madam? One company can hold 51 percentage of the capital in another company, or it can hold the members or the directors. So more than half of them belong to this company. Then also it becomes a holding company. So in any ways, which if you're able to control the other company, okay, the other company, then that company which is holding the control is called as holding company. And one which is subsidiary to that, which is getting controlled by the other company, is called as the subsidiary company. And a company limited by shares and company limited by guarantee. This I have already explained. Every company has a limited liability. So when I'm going to subscribe for the shares of a company, I have paid some amount and the remaining amount is unpaid. To the extent of the unpaid amount alone, I am going to limit my liability. That is company limited by shares. If I'm going to talk about a company limited by guarantee, it means that the members, apart from subscribing for the shares, they also give a guarantee in writing. They say, in the event of the failure of the company, I am giving a personal guarantee or to that particular extent. So this will be limited by guarantee. So that particular guarantee amount which they undertake to bring it forward or they will take to give that amount of guarantee, till that amount only they will be liable, not more than that. Only to the amount of the guarantee given by the members the liability will be there. There is also the concept of unlimited liability company, but it is not that very prevalent because company itself means limited liability. You can also have an unlimited liability company. That's it. With this we finish the unit number 1. Yeah, small company is a very small company. For the small company, there are few transactions or the checklist or the conditions to be fulfilled. Okay. Yes, Ujjwal, can have the subscription even in case of a company limited by guarantee. Okay. Okay, Ujjwal. I'm just seeing the doubts. Tulsi Nath. What did I write? That is artificial person. Khalid. Yeah, equity is capital, Khalid. Kritika Ja, hello. Sakshi. Yes, I will do it in between. Yeah. Good doubt, Tanya Sharma. In every company, okay, the basic rights will remain the same. If you are a shareholder, you have a right for the dividend. If you are a shareholder, you have a right to look into the affairs of the company. If you are a shareholder, you can vote based on the equity shares that you are holding. Basic rights will be the same, Miss Tanya Sharma. But, okay, basic will be the same, but the point is there are few things which might differ based on the company. For example, in case of a one person company, that one person will have the maximum powers. No other shareholders are there. Single shareholder, single director, everything single. Okay. But when you talk about a public company, the rights of the shareholder might be really more. When you talk about the private company, the rights of the shareholders basics will not change, but they will have lesser rights than the public company. It can be like that. What is listed? What is unlisted? Listed company means, Tulsinath, one where you can trade. For example, Grow got listed recently. That became a listed company. That means the shares of that company will be available on your BSE and NSE. If you want, you can purchase and sell them. That is the meaning of getting listed. Unlisted, before to that process, it is not there on the stock exchange. It is a private company. Closed group of people are only there in that company. So then it will be called as an unlisted company. Harsh Vishwas, good morning. Shweta, who gives guarantee? The people or the members give guarantee. Okay. Anjali, is OPC better than Ola? It depends, Anjali. It depends on what is the point that you want to, what is that you want from the company. Okay. Bindya. Yeah, okay, you can write that, Bindya. No problem. Okay, chalo, now let's go ahead. Rishi Raj Purohit. So if you want to just see uh, the exact details of this one person company, again you have to go back and then sit and study about it. But for now, they will ask only the basics, Mr. What is his name? You're the one who asked me the doubt right now. So you don't have to worry so much about it, okay? Balance sheet is given, requisites. See, this is the format, okay? So you can just have this book with you. So when you go to the intermediate level, you can just see this and also refer. There also it will be given. This is the P&L account, okay? Okay. Please, all of you, please see which of the following statement, which of the following statement Okay, which of the following statement is not a feature of the company? Separate legal existence, perpetual existence, separate legal entity, perpetual existence, members have unlimited liability. Option number one is, can somebody tell me the answer? Option number one is C. Very, very good. Why C, madam? Because, madam, it is a company means there will be only limited liability. Yes.
Ma'am, C, ma'am.
So, yeah. Please don't unmute yourself, Akshit. I will ask you, then you can unmute, okay? Everybody
Okay,
else
ma'am.
are being silent, no? So, why are you unmuting yourself? Members have only limited liability. So, that is C. Very good. I've seen people answering here. Good. Now let us go ahead with the next particular point. Next point, in a government company, the holding of the central government in the paid up capital should be not less than 51 percentage. That is what I have written here, 51 percentage, because more than 50 percentage it should hold. So the nominal value is 51 percentage. Okay, good. Everybody are answering. Which of the following statement is true in case of a foreign company? What is a foreign company? A company which has the head office outside India but a place of business in India. Okay, see here. A company incorporated in India and has a place of business outside India. Is this true? No, false. It is a company incorporated outside India and has a place of business in India. Yes, it is registered outside India, head office, but in India it has a place of business. This is true. A company incorporated in India and has a place of business in India, that is a domestic company, not a foreign company. Good. Yes, everybody. So option third one, the option is B. A place of business is there in India, but it is incorporated out of India. Which of the following statements is not a feature of a private company? Restricts the right of members to transfer shares? Yes, that is a feature of a private company. Does not restrict on the number of its members to any limit? Wrong. The maximum limit is 200 members. What is it? 200 members. So there is a restriction on the number of members. Only in case of public company, you don't have a restriction. But in private company, there is a restriction, madam. Under Schedule 3 of Companies Act, assets and liabilities are to be disclosed based on current and non-current. My dear students, here there is a distinction. In case of the companies wherein you prepare the Schedule 3 based balance sheet, which means that your liabilities and assets should be classified on the basis of current and non-current. Meaning what? What is current? Short term. What is non-current? Long term. More than 1 year goes under non-current and less than 1 year comes under the current classification. Very good. Everybody of you know it before itself. That is so nice. Schedule 3 of the Companies Act prescribes the format and content of the balance sheet and P&L account only. Auditor's report, director's report, no. Schedule 3 just talks about the balance sheet and the profit and loss account. So the question 6 answer is A. Okay. A company is required to maintain its books of accounts at the managing director's residence. No. Largest branch office, no. Registered office. 7. A is the option. Very good. Cash flow statements are not required for a private company, one person company, public company. Cash flow statements are required generally for every company. But let us see the option. I think it is to be the one person company. Every company has to maintain. Eighth one is B. So basically, let us understand that private company and public company should compulsorily maintain cash flow statements. So 1% company need not maintain the cash flow statements is given here. Don't take, I don't want anybody writing, Mr. Tulsina, don't disturb the class, please. The presentation and disclosure requirements of a company are prescribed under the Schedule 3. Presentation and disclosure ka meaning, as per the schedule 3, your balance sheet and P&L account will be prepared in a format. Those requirements are given under the schedule 3. Okay. Following is an example of current assets. Current assets are what? Inventories, are they current assets? Yes, because within 1 year they will be sold. Property, plant and equipment, no. Fixed assets. Intangible assets, no, they are also more than 1 year. Clear, everybody? Now, please see here. Earnings per share is to be disclosed in which of the following section? Usually, earnings per share will be shown in your P&L account, because earnings you will find out. The earnings are nothing but profit. Profit will be found out in the P&L account. So, after finding out the profit and giving for all the expenses, finally you will divide by the number of shares. So, per share, this much is the earnings will be ascertained in the P&L account only. What is not a company under the Companies Act? Small company, it is a company. Private company, it is a company. What is this large company? No, madam, that is not a company. So the option is C. 12th one is C. Mr. Tulsinath, if I tell also, will you do this only? Will you not listen to what the teacher is saying? I don't appreciate that, please. Did you all understand the 12 questions? Okay. Anywhere, do you have any doubts? So that much is with regard to this particular chapter or this particular unit. Okay. Take a 5-minute break and then we can go ahead with the next unit. Yeah, Sakshi, you're able to understand? I'm doing it in the very basic English only. Okay. Shweta Sharma understood. Okay. Ujjwal Goyal. Okay. Bindya Binu. When all of the we start discussing, no, the class becomes very lively. Everybody starts replying back. Let's take a 5-minute break and then we will start with our unit number 2. Okay, take a 5-minute break. From 12 o'clock, we'll start with the next unit. Are you there, Tulsi? Tulsi Nath? And we go ahead with the next unit. So we are going ahead with the unit number 2, right? So unit number 2 talks about issue of shares. Under the issue of shares, there are multiple topics or the multiple treatments or multiple situations that we are going to see. But first, let us start with the basics. What is a share? I want all of you to unmute yourselves. I mean, mute yourselves, not unmute. Mute yourselves, okay? So now listen. What is a share? The money needed by the company to carry on its business is called as the capital. Economic term, accounting term, terminology, you don't tell as money. You call it as capital. What is required for you to carry on the business activities is called as the capital. Point number 1. Now, my dear students, I told you the benefit of you having a company is because it is capable of raising a huge amount of money. Like it wants the public to give the money. Correct? So the entire amount of capital, okay, divided into small parts is called as the shares. Okay. So capital is the money required. Okay. When you issue shares and get the capital, it will be termed as share capital. Okay. When you issue shares and get money, that money is called as share capital. And the people who are giving that money are called as shareholders because they are holding a share in your company. Correct? So now when I talk about shares, it is nothing but a share in the share capital of the company. Meaning 10 lakh rupees the company needs or it has raised through the issue of shares. So the total money is 10 lakh rupees. But Hiranmai, today I am holding 10,000 rupees. That is my share in the company. Clear? So that is share, share capital, shareholders. This is the concept. Basic. Capital is the money needed by the company to carry on the business. When you raise that capital by the issue of shares, it is called share capital. People who are issuing or they are subscribing or they are purchasing the shares of your company by giving you money, they are called shareholders. And what is the share? Share is a share in the share capital of the company. Out of the entire share capital, mine is a small portion. That is the share. Clear, everybody? Now, coming back to the point, always the 10 lakhs will be broken down. So let us say that 1 lakh shares a company is planning to issue whose value is 10 rupees per share. This value is called as the nominal value or the face value. Why, madam, called as face value? When I purchase the shares of a company as a evidence, when I purchase the marker, they will give me a invoice or a bill. The same way, when I go and purchase the shares of a company, I require a proof. That proof is the share certificate. The share certificate will tell you so many number of shares into the face value. So much is being purchased by Miss Hiran. So coming back to the point, this particular value written on the face of the share certificate is called as the face value. So the entire 10 lakh rupees is divided into 1 lakh shares of 10 rupees. That means this 1 lakh shares is available to be taken up by the public. Okay. So I can take 10,000 shares, you can take 5,000 shares, like that. Different people from different corners who are interested in the company, based on the progress of the company, they can take those shares. Clear? Yes. Now we go to the next concept, wherein I'm going to talk about how is the process of the subscription that takes place. So any company that wants to go for the public subscription, they do this prospectus. So they'll have to follow a series of steps. Okay. So we all in the news, you will be hearing like people are coming for IPOs, initial public offers, and all of that. So any company that is wanting to get itself listed on the stock exchange and wants to give the shares to the public, it has to undergo few steps. It has to undergo few things, and then it has to progress further. But as far as our issue or our unit is concerned, we will just talk about the different types in a very basic or a found in a very basic manner. Okay. Now the first thing is, I told you the money raised by the issue of shares is called as the share capital. Correct. Now there are different types of share capital itself. So the first thing, let us see what are they. The first thing is called as the authorized, registered, or the nominal share capital. At the time of filing the prospectus, what is this prospectus? When you want your shares to get listed, you need to give the complete details to the particular stock exchanges, to particular SEBI, whoever controls that, you are supposed to give it to them. So now coming back to the point, my dear students, you need to file a statement. So this prospectus is like giving the information related to the entire company. So what is the company proposing to do? So this particular prospectus has this capital clause which talks about, or capital clause is given in the MOA and the AOA. So generally you file it in the prospectus also. You have it in your memorandum of association and articles of association. These are two important documents. Whenever you are going to do a company or register a company, you will have these documents. In your memorandum of association, there will be a clause called as the capital clause, object clause, then capital clause. Like this, 5 to 6 clauses will be there. In the capital clause, you were going to mention the maximum amount of capital required by the company. So, madam, suppose if I say 10 lakhs in this capital clause, then is the 10 lakhs my authorized and registered or nominal capital? Yes. Madam, in the future, if I want to increase it, 10 lakhs is okay now, but my increases, my business is growing, it is expanding. So can I change the authorized clause or the authorized capital, this capital clause? Can I? Yes, you can do it, but there is a resolution you need to pass. There is a condition. If you fulfill the condition, if you take the consent of all the shareholders, of all the members, stating that the company's business is growing, I need more money. So definitely you can increase your authorized, registered, or the nominal share capital. That is point number one. Now, point number two. Okay. Out of the authorized share capital of 10 lakhs, immediately I don't need the entire money. So I will just issue, let us say 5 lakhs. This is called as the issued share capital. Okay. So issued share capital, which means that I can, out of the total authorized, when I, as per the requirement, business requirement of the company, I can issue the capital to the public in lots. Okay. So this is issued. Now, my dear students, if the company is going to issue, who is going to reply back? The reply should come from the public. So if I am going to issue, let us say 5 lakhs, the public is also ready to take 5 lakhs. So whatever you have issued, they have subscribed. That is called as the subscribed capital. Clear? First one is authorized, then issued capital, then subscribed capital. The next one is the called up capital. The meaning is after the shares have been allotted here, the company will make a call. So to understand this concept, when we start doing the question, you will understand. Okay. So now what happens after the company issues the shares and the people take the particular shares? Okay. The SEBI's requirement is that the face value of 10 rupees, whatever I was talking about, the face value written on the share certificate, correct? This will not be collected in one installment. That is 10 rupees. Should not collect it immediately. I should minimum break it into two installments. Okay. The first one called as the application money. When you're going to apply, you should pay this money with the number of shares. Okay. And after that, once after the shares have been allotted, then the next call will be called as allotment money. After the allotment money, I can have first call. I can also have second call. This depends upon how much the money is required. Okay. If only little money is required, I can have first call, second call, final call, any number of calls. It is the decision of the company. But people, please understand, entire face value of the 10 rupees per one share will not be collected in one installment. There is a requirement, there is a rule that you have to collect it in more than one installment. More than one installment means application money, this will be the first installment, and then you have the allotment money, and then first call, second call, and the final call. Clear? So now when I talk about this breakup, when you come here, the company can ask for the allotment money, let us say 2 rupees. So the company will call for the allotment money, and then you will have the paid up capital. Again, paid up capital, what is the meaning? It means that out of the 2 rupees, okay, so let us say how many number of shares? 5 lakh shares is 50,000 shares at rupees 10 is issued. 50,000 shares at rupees 10 is subscribed over. Now the company is asking for 50,000 into 2 rupees allotment money, which is 1 lakh. But out of 50,000, we have only 48,000 shareholders paying to that particular value. So what happened to the remaining 2,000 shares? They have not paid. So the 2,000 shares will be called as calls in arrears. Arrears ka meaning something you have not cleared, something you have not paid. In this case, the amount of the share capital or the face value of the share where you have defaulted and not paid is called as the calls in arrears. Yes, clear everybody? That's all. This is the different types of share capital that you can have. And finally, there is something called as reserve capital. This reserve capital is like in your, when we used to have the earlier bikes, whenever or now also, your petrol, no, when it keeps coming down, we say that the petrol is running in reserve. That means it's a warning sign. There is a little bit petrol left in the particular Ma'am, subscribed capital can be more or less than the issued. Yes, I will come to that concept, Ujjwal. It can be more or less. Okay. So now let us understand what is reserve capital. Reserve capital means it is like a warning. Or in this terms, reserve capital refers to that amount of capital which is not called. That means this 1 lakh, this 10 lakh rupees we are saying, no, suppose it is 1 lakh shares into 10 rupees, correct? So out of the 1 lakh shares, let us say 10,000 shares are not called. Okay, this 10,000 shares will come in the reserve capital. They are nothing but the uncalled capital. Then when will you call this, madam? Only at the time of winding up of the company. So only at the time of closing the company, when you need money, you are going to make a call for this uncalled capital. Until such time, this reserve capital will not be shown anywhere. It will not come in your balance sheet. Nowhere you are going to disclose this reserve capital. But there is a concept called as the capital reserve. What is capital reserve? Already you would have known any capital profits made from the sale of assets, that profit will be transferred to a reserve called as the capital reserve, which is nothing but the capital profit. Once in the lifetime, it will happen when you sell an asset. If you're getting a profit, that will be transferred to the capital reserve. So the names are just different: reserve capital, capital reserve. But capital reserve will be shown in the balance sheet under the reserves and surplus. It will be shown under the balance sheet under the concept of, or under the heading reserves and surplus under the share capital heading. Is that clear? So this will come in the balance sheet, whereas reserve capital will not come into the balance sheet. Okay. Reserve capital will not come into the balance sheet. So that is the concept of the types of share capital. Authorized, registered, and nominal share capital means in the memorandum of association under the capital clause, the maximum amount of capital as required by the company. That is called as the authorized. That is the maximum. In future, if you want to change, you can change it by passing a resolution. That is, after getting the permission from the shareholders, you can change that. Out of the entire authorized, registered, or nominal, you need not, okay, you need not issue the entire shares based on the dependency, based on the requirement. If you are going to issue only a part to the public, that is called as the issued share capital. Out of the shares you are going to issue to the public, how much shares are taken up by the public? That is called as the subscribed share capital. Now, when I talk about called up capital, paid up capital, it depends upon the face value. So I told you SEBI has given clear instructions to each and every company. Whatever may be the face value, don't collect it in one installment. You have to collect them in different installments, like application, allotment, first call and second call. So this is how, when you do it, it becomes very, very important. When you do this, when the company makes a call, okay, how much money is received by the company comes under paid up capital. What is the call money it has asked for into number of shares is called as called up capital. And then you have the concept of reserve capital and capital reserve. Reserve capital means at the time of winding up of the company, you hold certain shares without issuing them. You hold certain shares without even calling them. So why? Because at the time of closing of the company, to meet the expenses, you might require certain amount. You might require certain money. So that you can do by issuing the shares and collecting the money. Okay. So that will be called as the reserve capital. And the next one is called as the capital reserve. Capital reserve means any capital profit that you generate by the sale of the assets will be grouped under something called as the capital reserve. So that will be shown in the balance sheet, in your financial statements under the reserves and surplus. But this reserve capital will not be shown anywhere. Is this clear? The reserve capital will not be shown anywhere. Now we go ahead with the accounting entries for the issue of the shares. As I was telling you, you tell me what will be the entry when you get money by the issue of shares. Okay. Now the only entry, or there is one single entry. When you get money, you will debit the bank account. And by issuing, from where are you getting money? You are getting money by the issue of shares. So share capital. Why are you crediting share capital? Because share capital is a liability. Why, madam, liability? Is it the company's money? No. Public or the people outside have given money to the company to do the business. So ultimately, you should give it back to them. Till such time the money is there with the company, you should treat it like a liability. So that will be called as share capital coming in the credit side. Okay, madam, if there is only one single entry, then why am I studying so many big concepts? No, this is one single entry, correct. But As per the SEBI's instructions, I told you that each and every face value, whatever is there, should be broken into minimum two installments. The first installment is called as the application money. Let us take it as 3 rupees. Then we have the second installment name is allotment money, 2 rupees. First call or second call or final call. This can be any names you can give. So like first call, first and final call, you can have it like that. But the first two should be application money and then allotment money. My dear students, let me explain the process. Whenever you want to apply for the shares of a company who is issuing the shares to you, the first thing is you are going to first give them the money directly. Okay? That means how much application money is needed. Whenever you see the advertisement or whatever is the application money, that installment value, you will take that amount into the number of shares you want to apply, and then you will be sending it to the company. Okay, so in the case of application money, from the point of view of company, we have to pass the entries. So the first entry the company is going to pass is, I have received the application money. I have received the application money. So the first entry always will be the receipt entry. Receipt entry means bank is coming inside. I am getting money. But due to what? Due to share capital? No. Share allotment account. Why are we opening this account? Because the share capital now gets divided based on the installments. Okay. So now I am getting 3 rupees into 10,000, which is 30,000. So here narrations are important, being the amount received on application. That is the first step that I have to do. Now I received this money. Okay, madam, correct. But what should be the next entry? Ultimately, this 3 rupees belongs to the face value. Correct? So it belongs to the share capital only. So what I am supposed to do? Next is I should be, yes, there should be application. The next one is I should pass the transfer entry, which means that share allotment account, from this account, I take it to the share capital account. 30,000, 30,000. Why do you do this? Madam, ultimately 3 rupees is a part of my 10 rupees. No, madam. I should not take it. Oh, share application. Sorry. I am sorry. The first one should be share application. Thanks, Ujjwal. Share application account. I'm sorry, it is not allotment, it is application. Okay. So the second one is I should take the share application money and give it or put it in the share capital only. So for the ease or for the convenience, wherever bank is coming, I put it as the receipt entry. And whenever the share capital is coming, I call that entry as transfer entry. Okay. It is transfer entry. Very, very good. So, my dear students, for application, this installment I have passed two entries. So, my dear students, after the company allots or application money you have given to the company. So now the company knows who you are. It will allot the shares to you after they have received the application money and they have checked, okay, I have 10,000 shares. This they have also applied for 10,000. Okay, now come on, give the shares and then you become the shareholders. Okay. Now the second thing, what is that? Allotment money. From here onwards, first will not be the receipt entry. From the allotment onwards, the first will be the transfer entry. Why, madam? Because the company believes that the shareholders will pay the money. So first it will pass the transfer entry. What is this transfer entry? Share allotment account debit to the share capital. Transfer entry will always have the share capital, correct? So 2 rupees into 10,000, 20,000 and 20,000 being the amount transferred to the share capital. 20,000 and 20,000. Simple. And then after it transfers, it will then ask them, it will send letters to them asking, boss, you are supposed to pay the allotment money. Please give me the allotment money. So then it will receive money from them. Bank account debtor to share allotment account, which is 20,000 and 20,000. So this is the amount received on allotment. Okay, this is for the second application. Application over, allotment over. Now, first call. First call also, first transfer entry. Share first call account debit to share capital, which is 3 rupees into 10 again, 30,000. Please write. And then the receipt entry will be bank account debit to share first call. Okay, write the narration. And then we have the share second call. First will be the transfer entry, share second call account debit to share capital. I don't have place, so I'm writing like this congested. And then will be the receipt entry, bank account debit to the share second call. Clear, everybody? So, my dear students, now did you understand the simple entry of bank to share capital? If you are going to, narration is a must. If you are going to pass, first this particular entry should be there. Okay. Now, all of you, please see, when you combine these two entries, it is bank account debit to share capital. Again, combine these two entries, share allotment goes off bank account to share capital. Again, combine these two entries, bank to share capital. This is bank to share capital. Okay, Akshit, what is the problem? Please write the narration, no? Yeah, if you want, you please write the narration. So, my dear students, for the 4 installments, there are 2 entries per installment. So, minimum, you will be having 8 entries. I think this is the maximum. Okay, maximum you will be having these 8 entries whenever you are going to do a full-fledged problem. Clear, everybody? Do you have any doubts? For only the application, first will be the receipt entry and then the transfer entry. From the allotment, first call and second call, the first will be the transfer entries and then only you will have the receipt entries. But my dear students, don't forget the basic logic. Ultimately, this is the one single entry. Okay. For getting this entry, there are so many in between entries that we are doing. Okay. So coming back, now let us go ahead with the next concept, which is subscription. Okay. Now let us go ahead with the concept of subscription. There can be 3 types of subscription. All of you please listen. There can be 3 types of subscription. Okay. The subscription can be normal subscription. 10,000 shares I issue, people also take up 10,000 shares. So 10,000 is equal to 10,000, no problem. I can do the question with 10,000. Now I issued 10,000, but only 9,000 people have taken up my shares. Can there be a situation like that? Yes. When the company is new, people don't know much about the company. How will they trust the company? That is why whatever the number of shares are there, so many people will not take it, but some people will take it. So whenever the issued shares are more, subscribed shares are less, it is called as under subscription. It is called as under subscription. Madam, in under subscription, what should I do? Should I take 10,000 shares or should I take 9,000 shares? Before doing that, you should check for the condition of minimum subscription. That means See, ultimately, the investors are putting their hard earned money in the business, correct? With a hope that, yes, the business will do better. I will get good returns. Instead of putting it in FDs and all the other safe things, they are coming and they're giving money to the business, correct? So the SEBI will always be concerned about the investors' protection. So what it will say is when a company is new and the subscription is undersubscribed, you should check for the minimum subscription condition, which says at least 90% of the issued capital should be subscribed. Only then the company should go ahead with the allotment. If 90% criteria is not met, then you cannot even go ahead. If the 90% criteria is not met, then you cannot go ahead. What should the company do? Whatever money is received, that it has to return it within a period of, I think, 15 days or 30 days, you have to return back. So this 15, 30 days, if you keep it aside, the point is here you need to understand that if there is an undersubscription, what should you do? Check for the condition of minimum subscription. What is minimum subscription? How many shares you have issued? Out of that, at least 90% of the shares you should have got back. That means people should have subscribed or taken minimum 90%. Here, out of 10,000 shares, 9,000 shares have been taken up. That means 10,000 into 90%. Okay, 10,000 into 90% is 9,000 shares. So I will take the 9,000 shares and I am going to do the question. My dear students, please see in under subscription, if 90 percentage minimum subscription criteria is met, then whatever shares you have received, the company has received as subscribed, that will be taken for multiplication in the question. Clear, everybody? That will be taken up for the multiplication in the question. And your accounting treatment, all the entries will be the same. No change in the entries, my dear students. No change in the entries. It will be the same. For normal subscription also the same. And for the under subscription also the same. Now we come to a situation where the company has a good rapport or a good popularity in the market. 10,000 shares it has issued, but it has received subscription for 15,000 shares. This is a situation of oversubscription. That means what? 10,000 shares only I have, but 15,000 shares I received the money. So what can I do? Excess is 5,000 shares. Okay, excess is 5,000 shares. So let us say the application money is 3 rupees. How will I do my entry? How will I do my entry? All of you, please see. The first thing is the receipt entry will come for the share application. So whenever there is an over subscription question, all of you, please listen very, very carefully. Again, don't ask me, explain this after explaining it here. Akshit, concentrate. Bank account debit to share application. Whenever there is an oversubscription problem that you are doing, always the amount that you received on the larger number of shares, 15,000 shares, they have given me money 3 rupees per share. So 45,000 and 45,000 being the amount received on application. Now, madam, yes, now, madam, this 5,000 shares is extra. What can you do? There will always be the option given to you. You can either fully reject it or you can fully accept it or you can do a combination of partially accept and partially reject. So let us consider, okay? Let us consider in my example, 2,500 shares I have accepted, 2,500 shares I have rejected. Now, madam, what is the meaning of accepted? Rejected means I can understand. Excess money is there, I want to give it back to the shareholders, I am giving it back. Over. What is this accepted, ma'am? The extra money I will not reject to the people immediately. But what I will do, I will tell to them ki I am accepting your money right now. Okay. accept your money right now. Very good, Radhika. But I'm going to treat it like advance money. Your money, I will have it now with me. But further, when I want the allotment money, first call money, I will adjust with that. So the meaning of acceptance is I will do a pro rata allotment. Pro rata allotment का मतलब क्या है? Are you additionally allotting shares? No. Shares का numbers वही रहेगा. पर द एक्सेस अमाउंट जो कुछ भी आपके पास है वो रिजेक्ट करने के बिना यू विल होल्ड इट एंड फर्दर आपको जब अलॉटमेंट मनी चाहिए आपके पास जो कुछ भी एडवांस पैसे है एक्सेप्ट किया है ना उसको सबट्रैक्ट करने के बाद आफ्टर सबट्रैक्टिंग द मनी यू हैव ऑलरेडी कलेक्टेड एज एडवांस हियर द रिमाइनिंग ओनली यू विल आस्क देम. Okay, now how will the entry change? The second entry, which is the transfer entry, may changes will come. So this share application will be still 45,000. To this entry will become CBA entry. Whenever there is an oversubscription, your second entry, which is your transfer entry, make it a CBA entry. CBA entry का मतलब क्या है? To share capital, to bank, and to share allotment account. Okay, what will be the share capital? Share capital always the face value. In other words, how much is being issued? Only 10,000 shares, ma'am. So 10,000 into 3 will be taken as your application money because I need only 10,000 shares and the application money is 3 rupees. So 30,000, I'll take it here. How much is rejected? 2,500 shares into 3. That is 7,500 is rejected. Correct? And how much is accepted means advance money kitna mere paas hai. Gain 2,500 shares into 3 rupees, 7,500. So this is being the transfer entry made after adjustment and rejection. You have rejected also, you have accepted also. Accepted means you have adjusted also. Pro rata allotment you have done. So this is how in an oversubscription the entries will change and the effect will be there only in these two entries. Then madam, when I do the allotment entry, where the difference will come? In the allotment entry, transfer entry में कुछ problem नहीं है. बैंक एंट्री में जब आप बैंक अकाउंट टू शेयर अलॉटमेंट को पास करते हो, this amount of share allotment 7,500, you have to subtract it and then only pass it. For example, I will tell you this same question, okay? So I will write it here. This same question, let us assume that 2 rupees is the allotment money. Okay, how much is the value for allotment? Let us say 2 rupees is the allotment money. So first the transfer entry will be share allotment account debtor to share capital, correct? Now this 15,000, after you pass this entry, it will go away from the question. So 10,000 shares into 2 rupees. So here it will be 20,000. Here it will be 20,000. So here transfer entry made. Now when I pass the receipt entry, which is the bank account, debit to the share allotment account. All of you please see here. You need 20,000, but already you have 7,500. So subtract these two. Share allotment debit side 20, already credit side 7,500. After you debit, it will be 12,500 and 12,500. This is the receipt entry made. Clear everybody? The receipt entry made. This is how you will have to pass for an oversubscription question. That's all. Simple. Normal subscription with 10,000 normal entries, not this. Under subscription may you have to check for the minimum subscription condition where 90% at least you should receive the issued shares. Otherwise, you cannot go ahead with the allotment process. Okay, you should refund back the money. If 90% is met, then your question should have only this lesser value. You will take 9,000 shares and proceed with the question. Normal entry, no change in the entry. Okay. But when you come to over subscription, the entries change in this format. Madam, suppose in my question, nothing is rejected, fully is accepted. Then what will happen? This will become bank account becomes zero and fully this becomes 15,000 because 5,000 into 3, 15,000. Then 20,000 minus 15,000 here it will be 5,000 and 5,000. Or I can have in some questions, madam, fully rejected, madam, there is no pro rata adjustment. So in bank 15,000 will come, this will become zero. And here 20,000 will remain as 20,000 only. So you can have a combination. But my dear students, जब भी आप over subscription का question पढ़ते हो, second one, please write this entry. Make it a habit. When you write that entry, what happens? Automatically if बैंक में कुछ भी नहीं है यहाँ पे zero डाल दो and take everything to share allotment. Or if everything is rejected and share allotment में कुछ adjustment नहीं है, take this as zero and show the amount in the bank. But always remember, if you have an oversubscription question, please pass the CBA entry. Madam, कहाँ से CBA? Share capital में C, बैंक में B और share allotment में A. CBA or ABC entry. The second entry will become your CBA or ABC entry. That is very, very important in case of oversubscription. And जब आप you do the share allotment and the second allotment entries, आपका receipt entry में don't forget to subtract if you have an adjustment here. That's all. Is this concept clear to everybody? Is this concept clear to everybody? Can I go with the next concept? Which is issuing of shares at a value higher than the face value. Okay. Whenever, Akshit, please wait, I will take your queries. Whenever you're going to issue the shares at a value higher than the face value is 10 rupees. But sometimes the company has a very higher reputation. Goodwill is so much for the company. The people, investors don't mind paying the amount a little extra. So that higher value is called as the premium. Okay. That higher value is called as the premium. So where will I show that, madam? Will I add it with the face value and show it? No, my dear students. The amount or the premium that is collected will be taken to a separate account called as securities premium. So suppose I say face value is 10 rupees plus premium, I am issuing it at a higher price than the face value. This will be called as the premium. It will be taken to a separate account called as the securities premium. As per section 92 of the Companies Act, the securities premium can be utilized towards five things only. The first thing you can use it is towards the issue of fully paid bonus shares. If you want to issue bonus shares, you can utilize the amount from the securities premium. Okay. To write off the preliminary expenses. What is preliminary expenses? You would have learned whenever a company has to be incorporated, there will be few one-time costs or expenses it has to incur so that it will get registered, it will get incorporated and come into existence. All those expenses are capital in nature. That kind of expenses will be coming under your balance sheet as a balance sheet item, capital expense. So your securities premium can use to be set off for writing off this particular preliminary expenses. And then whenever you are issuing the preference shares or the debentures, any issue cost, you can have any underwriting costs or any other costs or everything. Those costs can be taken from the securities premium account. And then while redemption that we are going to see, all this we are going to see in the later chapters. Okay. You don't have to worry. But there can be asked a 2 mark or question, true or false question, wherein can we use this particular amount in the securities premium account for the following? Then you have to remember this. Okay. Redemption of the preference shares and debentures, when you're going to redeem, you can use them. And for buying back your own shares. And for buying back your own shares also, you can utilize the amount. For buying back your own shares, you can utilize the amount. These are the five things for which you can utilize. Is this clear? Now, let us come to the actual part. Okay. Suppose I say 10,000 shares at 10 rupees plus 5. Your presentation of the question, whenever you read and you find that there is a premium, after writing the number of shares, you are going to give the breakup like this: 10 rupees face value, 5 rupees is the premium. And then where I'm going to write about the calls. So let us say 3, let us say 7, let us say 3, let us say 2. So if I put everything together, it is 15. So here, usually the premium will be collected as a part of your allotment money. In my example, let us say in allotment it is collected. So when I write 7 rupees, it means that it includes 5 rupees. So how much is the face value? 2 rupees. How much is the premium value? It is 5 rupees. So 2 rupees face value and 5 rupees is the premium put together. Always you should show like this in the brackets. Whenever there is a premium, the first thing is break up, or the question when you are doing a shares ka problem, this kind of presentation, if you are going to make it a habit, number of shares into face value. If there is a premium, add the premium. And how it is split. Already the split you know, but now there is an additional thing involved. Premium, I am telling you, it is collected along with the allotment. So what you should do, you should give a breakup. How much is the face value? How much is the premium? Clear, everybody? Now, madam, what will be the accounting treatment? My dear students, whenever premium is collected, your bank account or your receipt entry will not undergo a change. Here, where it is collected? In allotment. So, in allotment, when you pass the transfer entry, what is the transfer entry being passed? Share allotment account debit to share capital to securities premium. This is very important. Securities premium को भी हम credit करते हैं. Whichever side share capital comes, that side only securities premium will come, because it is a increase in the amount. So this is like a profit for the company, correct? Not liability, but profit. So now you tell me, my dear students, share allotment will be 10,000 into 7. It will be 10,000 shares into the total value, which will be 70,000. Now, share capital, always the face value. 10,000 shares are issued. Now, multiplied by within the brackets, the first value will be the face value. So, 10,000 into 2. 20,000 is the actual face value. Premium, what is the value? 5 rupees per share. So, 10,000 into 5, 50,000 will come here. Clear, everybody? This is how it will affect. Then madam, what about application में कुछ difference आएगा? No, same thing application. 10,000 into 3 in both the entries, that only you will write. Allotment में only here it is going to change. Then what about the receipt, madam? You don't have to worry about the receipt. Bank account to share allotment, the entire money is received. It will be 70,000 and 70,000 over. The only difference where you are going to record securities premium is only in the transfer entry. How about first call, second call? Normal entries. So wherever the premium is collected, in my example, the premium is collected in your, along with your allotment money. So in the allotment, in the transfer entry, you credited the securities premium with the amount of the premium received. But suppose in sometimes I can also take it with application. So in application, in your transfer entry, you have to write it on the credit side to securities premium. If you collect it with first call may in the transfer entry, you have to write it. Okay. What will be the transfer? What will be the narration? Being the shares transferred at a premium. Being the amount received. What is this, Tulsinath? You're asking very, very basic. How much amount you received? No, that's all. Simple. The way that you are going to, or the other person will be able to understand, you have to take it. Is it clear? So all of you, this concept is clear, everybody. Concept number 2, wherein the shares are issued at a premium. Yes, wherein the shares are issued at a premium. Now we go to the next concept of Calls in arrears, calls in advance. One of the most important concept. What is calls in arrears? I already explained it to you. Whenever we make or the company calls the money, some of them can pay, some of them cannot pay, or it is not always that they cannot pay. Most of the times you'll receive the entire money. But sometimes if the people are not able to pay, what you're going to do? That is the condition of calls in arrears. Sometimes when you ask for only one money or one particular call, some people will have extra money with them. So what they will do, they will say, I will make payment of all the calls together. So this is the concept of calls in arrears and calls in advance. Let us see in one problem, very, very casual problem I will teach. 10,000 shares at the rate of 10 rupees. Okay, 5, 3, 2, 10 rupees. Okay. Now, one person who is holding 1,000 shares does not make a payment in the allotment. He also does not make a payment in the final call. When I write minus, it is calls in arrears. Now, another person is there who, when you asked for the allotment money, he holds, let us say, 2,000 shares. What did he do? When you asked for the allotment money, he also paid the first call money. So this is arrears amount or arrears shares. This is advance shares. So madam, how do I pass the entry? All of you please remember securities premium will come in which entry? Transfer entry or receipt entry? Securities premium account will come in which entry? Transfer entry or receipt entry? All of you? Transfer entry or receipt entry? It will come in the transfer entry. Okay, Shweta has answered. Tanya. Next, I want everybody to answer. It will come in the transfer entry. Now, my dear students, calls in arrears will come in the receipt entry. Where will it come? In the receipt entry. Okay. Now, calls in advance will come in both the entries. Calls in advance will come in both the entries. I will show how. Yes, everybody with me? So now first I'm going to pass for the application. The first thing for application it will be the receipt entry. Please, you people write the narration. Don't ask me, madam, what narration will come. Enough times I have told you. Okay. So first for share application, 10,000 shares into 5 rupees application. So 50,000. This is a normal subscription question. No oversubscription, nothing. Simple question.
10,
So
10.
being the amount received on application. Come to the second one, transfer entry. Share application account debit to share capital. The same 50,000. Clear, everybody? Now, all of you, please see, very, very important when I'm doing the allotment entries. The first is the transfer entry, correct? The first is what, ma? It is the transfer entry. When I do the transfer, all of you, please see here, very important. Share allotment account debit to share capital. Being the transfer entry made. What will be the amount, madam? As far as the transfer entry is concerned, you don't have to worry about anything because till now, did you receive the money? No. You are just believing that your people will make payment to you and you are doing the call and you have to transfer. So how much you should receive? 10,000 shares into what is the money that you have to receive? 3 rupees. So it is 30,000 that you have to receive. Clear? So no effect even in this particular allotment entry. Now, my dear students, in the receipt entry of allotment, I have a calls in arrears. All of you, please see. Generally, bank account debit to share allotment will be my entry. But when I have the calls in arrears, it is a loss for the company. The shareholder is not paying the company. So calls in arrears will come on to the debit side. It will come on to the debit side. Okay. How much is the share allotment money, ma? From the previous, I should receive 30,000. But how many shares are not paid? 1,000 shares they have not paid. So 1,000 into 3 is 3,000 rupees. Can I write the remaining 27,000 here? No. One more thing is there. So this 2,000 rupees, 2,000 shares, this shareholder has paid what? He has paid the call money here itself. So two calls in advance. Why am I writing it on the liability or the credit side? My liability, madam, somebody else has given me advance money. Anything I receive in advance will have a credit balance because it is my liability. So here it will be 2,000 shares into this amount you should write, not 3 rupees because 3 already received. So I have this into 30,000 that you leave. But calls in advance always see the next call value. This is 2 rupees. So 2,000 into 2, 4,000 I have received. But this is for the next call. So 34,000 minus 3,000 is 31,000 I have received in the bank. So here it will be being the amount received after calls in arrears and calls in advance. Both of them have A and A. You write it fully. Is it clear? Yes, did you all understand this particular transaction? Any doubt you people have this entry? Any doubts you have? Any doubts you have? So coming back in this particular allotment, you have some shares which have not paid the money. You have some shares which have paid the money for the next call. Okay, Tulsinath. So now coming back here, whenever there are calls, somebody has not paid. In that call, in that receipt entry may calls in arrears you have to debit. Okay. ओके मिस याशी क्यों लिया है 2 रुपीज बिकॉज कॉल्स इन एडवांस का मतलब ये है कि ये 2,000 शेयर्स का अमाउंट जो कुछ भी है वो अगले कॉल के लिए अभी पे कर दिया है सो 3 रुपीज ऑलरेडी उसने पे किया है दैट इज ओवर उसका इफेक्ट वी नीड नॉट गिव वंस अगेन इट इज ऑलरेडी देयर इन 30,000 अभी कॉल्स इन एडवांस के लिए यू शुड गिव द इफेक्ट सो इसके लिए 2,000 शेयर्स इनटू किस कॉल का अमाउंट आपको एडवांस में मिला है फाइनल कॉल का मनी आपका मिला है वो 2 रुपीज का दैट इज वाई दिस इज 4,000 नाउ तुलसी नाथ कमिंग बैक टू योर थिंग कॉल्स इन अरियर्स विल बी डेबिटेड इन द रिसिप्ट एंट्री ओके कॉल्स इन अरियर्स इज हाउ मच ma 1,000 shares he has not paid the relevant call that is 3 rupees that is why you are multiplying 1,000 into 3 but when you come to calls in advance you are multiplying it with 2 why 2 because calls in advance means for the next call he has paid the money no so for the next call he has paid the money means 2 rupees of the final call. Now itself I am receiving it. Since it is a liability for you, I am crediting the calls in advance. Is this clear? Both Yashi and Tulsinath. Now come to the third one, which is the final call. The first one will be share final call. Debit to share capital. Simple. In this, there is no effect. In this, there is no effect. It will be 10,000 shares into 2, 20,000 and 20,000. This is the transfer entry made. Okay. Transfer entry made. Now there will be an effect. All of you, please see very carefully. Now, in the bank or the receipt entry, here also this 1,000 rupees defaulted. Defaulted will go into which account? Calls in arrears account. Okay, madam, I did that. To share final call, correct? To share final call, how much is the amount you need? Not for the next year. Nishant, please see here, all of you. Final call, what is the amount you need, ma? 20,000. Okay, you got 20,000, you have written it. Calls in arrears, what is the value? 1,000 shares into 2 rupees. Present call, he has not paid. Okay, madam, 2,000 I have debited. Now, all of you, please see. Already here, you have a calls in advance. This 4,000 pertains to this particular call. So now calls in advance will come here in the debit side. Why, madam? Because I am now using this particular 4,000. So again, I will not ask 4,000 rupees from this person. Okay. Earlier I credited. Now that I have to show it because the actual call is made. So when I credited it, now I will debit it and close the calls in advance account. So out of 20,000, 4,000 I already have and 2,000 they did not pay. So if I subtract this remaining 14,000, I received it now. Is this clear? Calls in advance account will have to be cancelled. Earlier, I took it as an advance. Now, when I make the relevant call, okay, when I make the relevant call, I should write it on the debit side. Why? Because calls in advance is no longer required. This money is actually the call I made. So I will take the money from calls in advance account and put it with my already there in this particular share final call. I will now take the money. Call scenarios, obviously call scenarios, he has not made it. So this one will come. My dear Tulsinath, you are supposed to write it in the way they can understand. Don't write TERE. That is for my explanation and for the ease of explanation. I am doing that. Is this clear? Did you all understand this particular format? Yashi, Radhika, Ritika, Ujjwal, Tulsinath, Akshit, everybody? Did you all understand? These are the names that just flashing to my mind right now. Okay, so this is how you will do Bindya. This is how you will do an exact question when you have both calls in arrears and calls in advance. Okay, so there are correct. So there are three concepts that we learned today. The first one is subscription, normal subscription, under subscription, over subscription. Normal subscription, no problem, no change in the entries. Under subscription, check for the condition of minimum subscription. Minimum 90% should be there. If that is there, then with lesser number of shares, continue the question. In case of oversubscription, clear cut sum I have explained. There will be change in almost three entries. एप्लीकेशन कार्ड ट्रांसफर एंट्री रिसिप्ट एंट्री में चेंज होगा. रिसिप्ट एंट्री को CBA एंट्री को पास कर दो. Okay, because the excess received can either be rejected or can be accepted, or you can mix and do both, which I showed you. And when you are accepting it, you are making a pro rata allotment. उसके लिए the third effect will be in the receipt entry of the share allotment. Okay, so this amount should be subtracted. That is the concept number one. Concept number two, when a company has good name, good reputation, you can issue the face value at a higher value. You can issue the shares at a higher value than the face value. उस higher value को premium बोलते हैं and उस premium को collect करते हैं हम securities premium के साथ. Where will it come? जिस कॉल में और जिस कॉल में premium is given to you in the question, in that call you should go to the transfer entry and write the securities premium account on the credit side. As per section 92, you can use the amount in the securities premium for 5 things. Please learn what are the 5 things. And the third concept is calls in arrears and calls in advance. Whenever a shareholder defaults and does not pay the money, calls in arrears, it is a loss for you. It will come in the relevant receipt entry of the call. Okay, you cannot have calls in arrears in application. Application में calls in arrears नहीं हो सकता है. Only after application in your allotment and calls you can have the calls in arrears. There is a calls in advance, my dear students. In case of calls in advance, there is a point. The person makes payment for the next entry or the next call together. In that case, how will it be? Tulsinath, for you only I'm explaining. Please listen. So coming back, calls in advance, whenever you are receiving the calls in advance, that is here in allotment, you are receiving the calls in advance. Okay, so for that particular value, what you are going to do? You are going to credit this particular entry may in the receipt entry, you are going to credit the calls in advance. Then when actually you are making that call, you are going to debit the calls in advance and you are going to clear it. मिस याशी कॉल्स इन अरियर्स एक टेम्पररी अकाउंट है बट इस टेम्पररी अकाउंट का नेचर होता है लॉस की तरह. लॉस मीन्स और एन एक्सपेंस इज अ डेबिट बैलेंस, सो यू आर गोइंग टू डेबिट इट. क्लियर याशी? The others also, have you understood? Okay. Where is the tech support? Are we having Priya? Will she come today? Tech support, are you there? Okay. Mm, okay. Ujjwal, did you understand? Okay, Ujjwal, thank you. Anjali Yadav, did you understand? Okay, good. Final call, I have explained Tulsinath. Yashi, Monu Singh. Okay, good. You have understood. Bindya understood. Okay. Shobia Qureshi, crystal clear. Okay. Tanya Sharma. Okay. Chaitanya, Radhika. These are very important. I would like all of you to go back and practice. We have not started with any questions, but I've taught you three concepts. Okay. I want all of you to go back and check it. Nishant, it's not for the next year, but for this year only. Okay. Okay, Akshit. Good. Thanks, Anjali. Shweta Sharma. My watch looks good. This gifted by my friend Casio, antique model. Get it? It's a professional one. Looks professional. Okay. Mr. Akshit, you have a doubt? Okay, I'll take the doubt and then we'll end the class. Unmute yourself. You can. Can you unmute?
Ma'am, a very good afternoon, ma'am. First I would like to say, firstly, I'll say I missed you a lot 1 month, ma'am.
Hmm?
Your teaching was very nice, and I understood today very nice. I missed you when ma'am will come. When ma'am will come, I was asking
Oh,
Priya, ma'am.
okay,
I
very good.
so
I
so
came
now
back
you,
today. Hmm.
ma'am, are teaching very nice. Already I revised this chapter, but I doubt in true or false. Can I
True or
ask
false? Okay.
uh,
Hmm.
first and second question, ma'am?
You read out, no? I have to open that again.
Liability. Wait, just a minute.
Hmm.
Liability to the shares.
Hmm.
I'm reading the question.
Read.
Wait, just
Good if you have practiced. I'm happy.
ma'am. I practice also. Wait, that question opening here only, ma'am. Wait.
I'm waiting only. Don't worry. Hmm.
Every public is a listed company.
Need not be, no?
So, what reason can we write false in
Every public company need not be a listed company, but a listed company will be a public company.
next question is
Hmm.
death, insolvency, or change of members affects the existence of a company. He is subject to no further liability.
You tell me, will it affect the existence of a company? I told you perpetual existence in your unit one, which means that irrespective of the members there or not there, the company will continue to exist. So will it affect?
No, ma'am, it will not affect because company is separate legal entity, ma'am.
Very good. And it has a perpetual existence. Will it affect
Okay,
means no, it will not affect. So
ma'am,
the
what is
what is
the
the question? Yeah. What is the question
death?
that you
Death, insolvency, or change of members affects the existence of a
no, it
company.
does not. False.
We can write company is a separate legal entity.
Yeah,
Then
yeah,
what we
correct.
then
You can.
ma'am?
Company
So
is a separate legal entity with perpetual existence, meaning members can come, members may go. It will not affect the company.
what is
Okay.
our homework today, ma'am?
You want to do
Homework.
homework, whatever I have done now in the class, again practice with different, take different questions. Like I've given 10,000 shares, you make it 15,000. Face value 10 rupees, you change here and then try like this and see. I've done three questions. No, go back, see the recorded session again, change the numbers and then practice the same concept.
Ma'am, I
Everybody
was
else.
writing along with you, ma'am. So again, I will write in the same notebook.
Okay, very good. Thank
Thank
you,
you, ma'am.
everybody.
Nice
Bye. See
session, ma'am.
you.
Bye, ma'am. Bye,
Thanks.
ma'am.
Bye
Nice
bye.
session, ma'am.
Okay, ma. Okay, no problem. Thanks. Bye.
Bye, ma'am.